Welcome to Jade Capital Partners End of Week webinar. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. To open today's webinar, what a very confusing week. Now, kicking off with the dollar index, you can see that the market plummeted towards the trend line at 96.20 and responded in quite an aggressive rebound, and now looking towards the top side of 99.50.65, where I've drawn this line across here. In light of the current price action, we could even see the highs challenged around September of 100 to 100.50. Now beyond there would give further concerns of a stronger US dollar emerging, and could even see up towards 101 to 105 as an objective. In light of this pattern that's holding at the moment, a bullish oscillator in terms of the MACD histogram and also a bullish stochastic, however we don't have an ADX trend, still provides further upward momentum. Now I'd like to just quickly look back on the dollar index over the last 30 years. The US dollar index, or the DXY, is a measured index of a value of the United States dollar relative to a basket of foreign currencies, often referred to as a basket of US trade partners. It is weighted geometric means of the dollar value relative to the other selected currencies, being 57.6 in euro, 13.6 in Japanese yen, 11.9 in the pound sterling, Canadian dollar 9.1, Swedish krona 4.2, and the Swiss franc, which is 3.6. Now looking at the next graph, going back to a period from 1967 onwards, you can see here that the dollar fell from 120 to a low of 80, which began with the Bretton Woods Agreement, which was broken, which the dollar was pegged to gold. And then you can see the market surged in the early 80s to 160 with the Latin American debt crisis. From there, the market collapsed back towards 80 in the early 90s after the stock market crash of the 1987, and then we had the start of the Japanese lost decades, and then the Asian financial crisis came in with a Russian debt default, which saw the market recover from 80 up to 120. And then we had the dot-com burst, housing bubble, and the financial crisis and quantitative easing in 2008. Now the dollar is comfortably sitting around just under 100. The reason why I'm looking at this graph is the fact that if the implications from the longer term pattern that I just showed you on the weekly here, you can see that the market since the beginning of the year has staged a recovery from 92, and it's now pressuring that top side from the recovery on Wednesday. Is that we get a break above that 100, could see a serious, or should I say a very significant move to the upside, maybe given a 105 objective. In the broader terms, I feel that the dollar, US dollar, will gradually move higher and show further momentum to the upside if this pattern is true to its nature. So what does that mean for the other currencies? Well, as you can see, over the last 3 months, the Australian dollar again fails at that 77 cents region. And from the retreat, especially from last night after getting retraced up towards 77.40 and fell away very heavily, as it did the prior day, the market is now looking towards support at 75.05.35. It is in view that while we continue to see, it must be about the 14th time now this market's failed at 77 cents, as you can see here right across the board over the last 3 months, is that my preferred view is that we will probably take out 75 cents and then move lower down towards 74 cents or even as low as 71.5. If my view is right on the US dollar in the coming months into next year, then the Aussie should be closer to the low 70s than more to the high 70s. So let's have a look and see how it progresses over the next few weeks and see if we can first of all take out that 75 cent level to get the next move lower. Euro still very much looking towards that support at 108.2035, and in light of the rejection from that top side region of 112 to 113, and also with the dollar index, as I said, it looks very much to a bullish pattern that's emerging. Euro can now look down below 108.20 and look towards 107.40, which may even go lower, and we could even see 104 as a potential target and reassess from there. Any advances, I would still be looking for further supply to come above 111 towards 113. My view on dollar yen has been bullish, and the reason behind that is that the market is short since everyone got quite negative in all the reports back over the last few months in June and July and August that dollar yen was going to go to 90. Well, it turned around, of course, and first of all staged an uptrend towards 104, the high 104s, pull back, and then we had that brief collapse on Wednesday, fell towards that support region of 101.0530, 18 was the low, and then the market rallied on Wednesday, and now makes further coverage overnight, and we call to high towards the 107.8090. In light of the current pattern, a break above 107.2035 would give the last round of short stops or stop losses, and expect to see a rise up towards 108.6570 and then turn around from there. So we're not too far away from seeing dollar yen top out. It has come a long way. I mean, since Wednesday it's travelled nearly 7 big figures, and in light of the current pattern, I feel that we're not too far away from seeing this eventually turn around. But let's see if we can get to 108 first before giving that call. Sterling, well, the demand that came overnight was mainly fueled by euro sterling collapse. If you have a look here, you see euro sterling in the last 2 days has been very heavily traded to the downside, and as you can see now, it looks like we could see at least another, I'd say about another 60 points and reassess towards that support around that 85, 70, 90 area. So sterling at the moment capped at 126.10. A break there will give further momentum and probably be like dollar yen, the last round to the upside towards 126.65 or 127.40 before turning around. In light of the pattern, the broader trend to watch for is down, and I do expect to see the pound eventually get weaker. But however, we need to see a move through 123.5 to get that move on towards the Brexit lows around 118 and reassess from there. Gold very, very erratic and rather aggressive towards the upside on Wednesday after reaching a high around 1330, 36, and then plummeted. With the overnight's price action attempting to rally back, fails towards that 1292 and then now takes out the support of 1260. What is concerning is the fact that although it's trying to make a recovery as we talk, his further risk to the downside is imminent, and I'll be looking for a move towards 1240 as a potential target and reassess from there, as we could even go lower down towards 1200 as a broader target, but we would need to see 1240 crumble before we can get that exposure. Towards the upside, resistance now comes in around 1272 to 1282.84. My view on oil, West Texas crude, I'm still seeing demand from $43 a barrel. However, the failed upside towards that 46.40 level now gives some concern that we may see a move to the downside. With that said, we would need to see a break beneath $43 a barrel to get the momentum to drive down towards 39. But at this stage, I don't fully support that view. I am more inclined to say that 43 may hold like it has previously in the last 2 times, back in late August and also in mid-September. So I'll be looking for another bounce from 43 and look towards $48 a barrel and reassess from there. And just to quickly wrap up, looking at the S&P, very aggressive price action after hitting a low of 2032 this week, and then very aggressive recovery and breaks through the downtrend, or the short-term downtrend should I say, and then recalls a high overnight of 2183, back to the highs seen in September. In light of the current pattern, we should not disregard further tests to the upside. This is probably only going to last for about 2 weeks, and then I feel that towards the end of November the market will turn away from that 2190 resistance and then see another bear phase come through and look for a move down towards 2140 and lower, down towards the zone around 2050. So in the short term, yes, I am bullish considering how the market has responded from those lows, but towards the top side of the range that we've seen here back in August, around that 2185-95 region, should see supply return and then eventually get the market selling off. Also, the Nasdaq coming off last night, tech stocks got hit quite heavily overnight, so we are seeing a bit of a mixed coverage here at the moment in terms of how the stock market's performing. And then also the ASX 200, very technically traded here. First of all, it broke from 52.70 down towards 51.40 and then bounced from there. However, collapsed, but did find support from the previous low, which was in June, off that 2030 level you can see here, and it was the beginning of the previous rally back in March. From the rebound, we should not discount further tests to the upside, but towards 53.80 and up towards 54.5, the market is likely to fail. Although we don't have an ADX or trend to support this rally, the MACD and also the stochastic is in full steam ahead to support the rally. But I feel this is the last leg to the upside, and then see a turnaround either from the high 53 or into the 54.5. So that concludes my end of week wrap up. Thank you very much for joining me. Please stay tuned for Monday when I'll be releasing my weekly report and seeing how the markets are looking for next week. Have a great weekend ahead.